Hey guys, Mike here with RepBitcoins. It's Saturday, January 23rd, and I wanted to post a quick micro market update on what's going on in the crypto space. And, obviously what I suspected yesterday in my update is kind of coming to, well, not fruition, but it's kind of playing out as I thought. I mean, this tape here is kind of building itself up to the finale, the conclusion here, I think that we're now experiencing. And I think the writing was on the wall when we dropped through 40K, right? So one of my mastermind guys just emailed me, or actually texted me and said, hey, Mike, is this the time to GTFO and exit crypto? Well, I told him I'm holding all the way down here because, this is kind of a deja vu, from last year. And yeah, of course, there are no guarantees that 30K will hold. There's never any guarantees in any market, right? But in terms of probabilities here, we have a lot of previous price action. We have a lot of context. That's the word I'm looking for. But a lot of context here, and it's good. It's a good probability, good odds. The odds are pretty good that, especially institutional players, the whales will stave a support here, because it's one thing to accumulate lower. It's another thing to let this market completely go to the dumpster. So I think that this is probably going to hold. At least we're going to see a bounce here, and then we kind of reorganize and can see what we are. But this here, especially with this acceleration, I don't know. I said yesterday, right? Remember what I said yesterday? I said this has to, and I was before the market actually dropped all the way down to like 36 or something. That was at 34, and I said, or 38, sorry, 38,800, right? 38,800, and I said, this has to stabilize. This has to kind of bounce back immediately and probably paint like a doji or something, or it's just going to go to, all the way. And I think it's going to go all the way. So mentally prepared, be prepared for 30,000, maybe even 28,000, something like that, to kind of scare, again, my old expression there, they like to use so often, scare the children, events like that here, with these long spikes down where we see capitulation. And if you're looking at this here, we have not seen capitulation yet. We haven't seen this big spike yet. And so this is my hypothesis at this point, that we're probably going down here. Sorry, I'm the bearer of bad news today, but that's, I think, probably what we're looking at. So, that's in your court. If you think, I will stick with the system. My system says, remain in Bitcoin, and it might switch us to Ethereum in the week to come. I have to consult the chart. Not console. Maybe I should console the chart too. But that's it. I don't really have to go through a lot of other indicators or anything like this. Let's take another look at total 2, see what the rest of the market is doing. So, similar damage. Quite similar acceleration, and a good chance we're going all the way down here. So altcoins are definitely taking it, up the what, and that's some technical damage here. So even if we bounce, this is going to take some time to repair. It's going to take some time to kind of work our way out of. So it's going to be an interesting winter. Let's look at total. That's really kind of the entire market, right, including Bitcoin. Yeah, possible support here, but I don't think it's strong. Here potentially. So, yep. We've dropped, in terms of market capitalization, we've dropped quite a bit. We're like, almost 3 trillion, we've cut that in half. So a lot of people have been shaken out. And then the chart that I showed you yesterday, I don't want to pull it out again, in terms of coin destruction, right? It showed us down in the lower rungs. And what I said yesterday still holds true. These are usually the periods of time when you are, when you're seeing a flow from form, but don't ever make the mistake to think that the price action stops right there, because these bottoms take time to paint, and a lot of times that capitulation can take us quite a bit down. Right, let me go back to Bitcoin. Actually, let's look at Ethereum. See how Ethereum is holding up. Right. Yeah. Also, I think we probably looks weaker actually in Bitcoin. So most likely we will remain in Bitcoin when we roll over on Monday. Yeah, it's all been pretty ugly. pretty ugly stuff, and this gonna have to find a floor here at some point, and we're not there yet. I mean, let's just look. I mean, look at previous lows, right? We might see something like this where it kind of burns out, right? Snaps back, capitulation, right? And then a little encore, and then it kind of then we get the retest. So these things don't just bounce back and just V formation. V formations are possible, but they don't really I don't see them happen very often. Let me go into log mode here. So if you're looking back in history here, look at previous crashes. So what you're hoping for is someone like this, right? Yeah. That was in 2000. What was that? 2020 in March, and that would be the most optimal scenario. Something like this. Okay, it bounces back. See that? A little retest. That was nothing actually. It finds it kind of gets its groove on, and it just kind of works its way up in a very nice, clean, low volatility pattern. And that's fairly rare. Normally we're getting something like this. Yeah. See, that's another. Here we actually didn't get a low. We didn't get a high volatility capitulation. Here we got like I don't know. It just kind of painted the floor. It's kind of weird, right? That was in 2018. I think that was a real bear market. So we're somewhere here, in terms of the correction we experienced. So I call this a bear market. Okay, what else? Let's look at a few more corrections. This was in 2015. Oh, that's Ethereum. Okay, let's go back to Bitcoin because I want to look at a little bit more price action. And Bitcoin obviously has more. So, okay, let's take a pick here. So this one is a nice bounce back, and again the retest. See, this is what we're hoping for, right? But notice something. If you're hoping for this, you also have to one thing comes with the other. What I mean by that is that you see this big wipeout. I mean, this is deep, man. This is really deep. I mean, it just took us like from when the market was already down, but quite a bit, and it was at the peak. It was at 10,000, and it took all the way down to like, oh wow, below 4,000, right? So this alone here is a drop from nearly $8,000, and by the time it kind of recovered, it was at 4,800. So that's like a 40% drop, right? And from here, it did work its way up, but only because a lot of players had been shaken out. So that's why if we get this deep drop, like boom, really, I mean, 27,000 something, and then it snaps back, right, really hard, then we might see this wave V formation. But if it just kind of works its way lower, like, let me see, find another instance of this. That one was quite a, see, this is another thing. I mean, this is a scenario where it's just going to work its way lower, right, slowly, and it can take, this can take weeks, yeah. So yeah, there's been a lot, excuse me, there's been a lot of talk about the Fed and everything. And so people ask me, what do you think, Mike, about the Federal Reserve and, tightening and everything? And, I've been an equities trader for quite a long time, before I got into crypto here. And my view on all this with interest rates and everything, let's step forward here, is that, yes, the Feds are planning on tightening and have announced these rounds of tightening, but it's kind of mysterious to me because they've tried this already in 2018 and 2019, and every time they raised the reference rate by like, I think it was like 50 basis points or 100 basis points, something like, it was some ridiculous amount. I mean, talking about like 5% of 1% or something like that. The market started throwing a taper tantrum. And that happened several times in a row. You see, I'm wearing gloves because it's cold. It's winter here today. And so what happened then afterwards is that the Fed pulled back fairly quickly, actually. And, before we knew it, we were back in, ZIRP territory, zero interest regimen, right? And policy. But this type of, this kind of hemming and hawing and trying to, it's something the Fed is not going to get out of. I mean, what is it going to do? I mean, if it starts in earnest raising interest rates as it has announced, like it is announcing many times, right, and has made no beef about, like emphasizing, then well, it's going to cut the equities market in half at least, okay, and I don't know. I don't see that happening. I think that, you know, once again, they're going to make big announcement, a lot of job owning, and in the end, they're going to be forced to pull back, and you know, and either stop or even, you know, bounce back to close to zero again, because it's, you know, the economic situation we're in right now, and not just in America, also here in Europe, and energy crisis and everything, and on top of COVID, right, that has affected the lives of, I think, almost everyone, right? I'm sure that some of you guys who are watching have people in their, you know, in the family that were affected, not necessarily who died, but maybe lost their job, or you know, will lose their job, or you know, making less money, or I don't know, are unable to continue in their job for various reasons, right? So all this, if you combine that, I mean, with a crashing market, well, you know, we're in an election year this year, so I have a hard time believing, and I've become maybe a little bit of a cynic over the years, that the Fed is going to actually not pull through, go through with all this, because it would cause chaos. And I mean, you know, from what I'm hearing, I mean, I'm not a political analyst, and I don't want to actually get into this. So maybe, you know, I for various reasons, right, and for obvious reasons. So, again, doesn't matter what side of a political spectrum we're on. I think it's clear to see that the Fed normally tries to keep things on an even keel, no matter what, and especially during election years, no matter who's in charge, right? You know, blue or red team, doesn't really matter. So, thinking that, if you consider that, I don't see how that will play out, and how they're able to really pull off what they've been announcing. I think that happened a lot of times, that they're trying to bounce the market back, but or you know, for whatever reason, making this announcement about interest rates, increasing interest rates, and then in the end they're forced to pull back. But just by the announcements, you know, it sets a tone, and maybe it puts a lid on inflation, who knows what. At this point, honestly, I really don't exactly understand the motivation. But yeah, with all the printing that's been going on, I mean, you know, how much are we sitting on? Over 3 trillion or something? It's insane. So the other side of all this, and I apologize the rambling, I didn't actually want to be this, you know, I didn't want this to be so focused on you know, macroeconomics or finance, right? My point is this: let's say, for instance, right, that the market continues slower, and then the Fed is able to, you know, the Fed pulls back and says, you know, well, you know, this was the market is in a bad shape, and we have to postpone, or I don't know, wishy-washy, right? A lot of these things that happen all the time, and make an announcement that all of a sudden gives the market the impression that it's pulling back again, because, you know, that might be the expectations at a certain threshold. What's going to happen on the crypto front, right? I mean, we're back to where we were before. And I don't think that really interest rates are the only thing that drives crypto. So sometimes things are correlated, but be careful with making these connections, right? Because correlation does not equal a causation, okay? Correlation does not equal causation. It's something, you know, in engineering that that we believe in, that's one of the mantras. So just because something is happening, sometimes there is an excuse for taking the market down, but it's not necessarily the underlying reason. Remember what happened last year with Elon Musk, right? And so Elon makes these tweets, and maybe he actually triggered this. And I think it was a similar thing here this year with Chinese selling at the end of, you know, Chinese having to clear their books by the end of the year. And yes, this triggered selling, and maybe the selling then accelerated, because it's kind of like a snowball principle, right? You have the snowball, and it kind of rolls and rolls, and the more it rolls, the bigger it gets, until it hits a tree, or until it's at the end of the line, right? And I see it's the same thing with momentum. Markets are momentum, right? I'm a momentum trader, obviously, and what we do actually when we trade crypto is momentum trading. And so what happens is, like, something triggers it and then it continues, but people then look at the whole scenario, okay? And that's usually a mistake that people make. They look at this and say, well, Fed is tightening. We have this correlation in equities, and so the crypto market is now doing exactly what the equities market is going to be doing, and that's going to be it. And I think it's naive to believe in that. It's naive to jump to these conclusions, because that's how you really get burned on a long-term basis, right? If you jump to these conclusions. So I don't try to fall prey to that, and I try to kind of look at the overall picture and say, okay, well, the crypto market was going up, and when interest rates were being tightened, or at least were announced to be tightened, what happened back then? So I don't know. So that's kind of a long story, right? To a short question. But just, I wanted to kind of lay out my perspective on this, because it does affect the long-term fate of crypto, but it's not just the dollar, right? It's not just the dollar or just printing that was the impetus of all of crypto and Bitcoin in 2009, 2010, when the white paper was released. There's more to it. It's the whole financial industry that kind of, what happened, bailouts and everything post 2007, 2008, that triggered this. That was, the nexus, that was the inflection point for this kind of movement, for this kind of, people, it grew so rapidly. 10 years, look where we are. So bottom line is this. Long term, the secular bull market, I don't think it's going anywhere. I maintain that, and I know it's hard. It's a hard statement to make when you see candles like this. But okay, we saw candles like this last year, and that's not necessarily an excuse. But bad things can happen all the time in markets, and markets sometimes slip off the plate. Maybe it's also just a matter, a lot of another factor is also that more institutional players on the space now. And with institutional players heavily being invested in the space, there's two sides to that as well. I have a lot of coin flipping, right? What I mean by that is, on one end, there's a lot of institutional liquidity that goes into the market, and yes, that institutional liquidity is able to bang the markets around, right? It's able to generate these big sell-offs and then buy, and then bounce it back up. Sometimes things get away from them as well. But at the positive side of it is that, and I think I touched on that early in this recording. The positive side of that is that you also have institutional players provide a floor when things get really, really nasty, right? This is not as big as a market. Crypto market is still not even close as big as, let's say, bond market or even equities market. So we're getting there, but right now we're like at what what do we look at, 1.5 trillion or something? It was like 1.8 the other day. So you're seeing, literally, the other day was 1.8, now it's 1.5 trillion. So a lot of coin have been destroyed here. A lot of people are, younger, young coins are being sold. A lot of people are heading for the exits. So, and I think once we reach that exhaustion point, that point of capitulation, that's when we have a good chance of actually more of a medium-term floor. Right? Long-term, where are we long-term? We are here. Okay, so always keep that in mind. I know. Of course, these are values where down in single dollars all the way up to $34,000 now. So this is the long-term trend, and that really hasn't changed for me. You might call me a bull-tard because of that, but yes, it's painful. A correction like that, always painful. I didn't want to see that, there was a good chance that we would have bottomed out here, but whatever triggered this, now we're in it, and we're gonna have to roll with it, and that's just how the cookie crumbles. In terms of indicators and everything, I checked, and the sentiment isn't it. We were not anywhere close up here. We weren't even 50% at the threshold, in NUPL or in Glassnode, right? Where we would see the market kind of keeling over because of too much exuberance, bullish exuberance, Greenspan, remember? or irrational exuberance, as he called it. And we weren't even close to that. We weren't like the 50% point or something. So there's other reasons for that. And this market is obviously evolving. So that's it. I hope that helps a little bit. Maybe that answers questions you were asking yourself, or maybe answers a few questions that you weren't even thinking about. I try to kind of, round out the picture here and give you my entire perspective. But, at the same token, I don't want to jump to spurious, like calling spurious bottoms here, right? Or saying, okay, this is going to hold because X, right? No, I mean, anything can happen in markets anytime. That's the one thing I learned when I, over the time, the hard way, when I became a trader, especially as I became more serious trader, right? So I would never make that statement. And, I'm also trying to kind of prepare you guys for, the potentiality, which right now in my mind, highest odds are that we're probably going to touch down here somewhere, right? So for me, the question at this point is not even this price level. It's for me is down here, are we going to hold, right? Is this going to hold? Are we going to bounce back? Otherwise, my advice right now, well, you have choices to make, right? Do you stick with the system or not? I'll stick with the system. I'll do what the system tells me. It has served me well back last year, and it'll serve me well again this year. Okay, and if you're pulling the plug here now, just be aware. Right? If you're saying, okay, this is it, I can't take the pain anymore. Mike is full of it, and we're going all the way. The crypto market is over. We're never going to bounce back. Yeah, that's your prerogative, right? That's your prerogative, but. What happens a lot of times is that, you pull the plug and that's exactly when the pain is the highest, that's when it bounces back. And then you kind of wait for a retest, like, okay, it's got to come back. It's going to come back down. I can rebuy. The perspective changes then. So the psychology changes from a psychology of pain that you're experiencing because of, the downside and your account principle. To oh shit now I'm out of the market, and if the market bounces back, how do I get back in, and when do I get back in, when do I catch that? So you're exchanging. Unless you say, okay, I'm done with crypto, right? Which maybe some people are pondering. I don't. Again, I've made that very clear. So many occasions that I think for me the long-term picture is really what I only care about. I don't care about these intermediate swings, but that's like a 2-month swing. For me, this is nothing. I'm prepared for these things. I am, because I've been through this so many times. Look at this price action here. Okay. Sorry making this so long, but I kind of really want to play this out because I kind of want to prime you guys for what this means to be in the crypto market. And this price action right here. Okay. Let's say you've been. Let's say it's July of 2019, and you're going through all this BS here, right? I'm like, it's all good. It's gonna make it, and falls completely off the plate, and gets from like 9,000 again, 50% cutoff, right? Oh, actually more than that, 3,800. So, and then bounces all the way back, and then it ran from here all the way up to what is that? 58,000 in what? In how many months? Let's check this. Almost 4,000. Okay, and that was March of 2020. And then by April, no, that was like, okay, that's April. That's 1 year, right? If I look at it correctly. Yes. In the course of 1 year, it went all the way up to $61,000 and change, something like that. Okay? Almost $62,000. Now you do the math, right? In terms of percentage points, what that means. It's just insane. And, look at the downside, painful, but look at also the potential this market has, and then look at this in comparison. So that's my perspective, and take it or leave it. Okay, I hope that was helpful. Apologize for my long ramblings about Fed and everything and interest rates and all this, but I'm obviously not an economist, clearly. But I've been around the block a few times, and I've been, reading pretty much and following every Fed announcement and FOMC announcement for the last, at least 14 years. So probably more than that. So I kind of have developed a certain sensibility about this and perspective that I think might be helpful. So take that or don't. But that's what I wanted to offer you guys today. Oh, it's my God, it's 25 minutes. So I apologize. But if it was helpful, don't look at your account. It's down. Okay, there's no reason to log into your account right now and just torment yourself. Just after you watch this video, just walk away and do something productive this weekend. Spend some great time with your spouse or girlfriend or boyfriend or who knows what, right? Just do whatever gets you out of this whole mode, because there's certain things we have no control over. We don't have any control over this. All we can control is our universe, what we do at certain stages, and that's the best we can do. So don't be on the phone here now checking Bitcoin every 2 minutes. Okay, I would not even have checked it, to be honest, today. But I take care of my mastermind, guys, and so when they ask me questions, I'm there for them. So that's why I had to look. That's why I decided to post this video. Otherwise, I was out today riding my unicycle, teaching my wife. She's doing great, and that was fun. And that's you can't let this affect you too much. That's also one of the reasons why you never trade too much money in crypto. Have a certain amount of money you have in crypto, so that you don't reach this pain point. That's I think the best policy, right? To be insulated psychologically. And also in terms of your decision making, in terms of not being drawn into making bad decisions at the worst time because you are overexposed. And I think that's a mistake a lot of people do, to get in, deploy too much money out of greed, seeing the market going up, but not considering that, a market that goes up 2,500% in a year, right? I think which I think that's how much it was. Has large corrections. It's just how it is. It's just how the cookie crumbles. Okay, enough. Almost been half an hour. So I wish you all nice weekend, and I'll see you, probably on Monday or Tuesday. I'll check in, and if there's anything new to report, I'll keep you guys posted. Cheers.